FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to, and perhaps even watching, the Financial Survival Network. I'm Kerry Lutz. Today is 12/8/2020, and well, lots going on here. We're seeing a rally in precious metals today, kind of a follow-up rally to what we saw last week. Friday was a down day, but Thursday was definitely an up day. Today's an up day as well. Is it the beginning of a new precious metals move upward, another leg up in the bull market, or is it just a recovery rally? And we'll just see it kind of bounce around until that day should arrive. Well, our good friend Octavio Marenzi is with us now. Octavio, it's great to have you back. Hey, any questions or comments for Octavio and myself, just email us, kl@kerrylutz.com. So Octavio, $5,000 gold, $3,000 gold, or $1,700 gold?
I suppose you could say 10,000 and 20,000. Eventually it will get there, I suppose. And just don't ask me when. If you wait enough years, it's bound to get up to that level. I think some of the predictions we had about sort of $3,000 gold are a bit sort of attention grabbing and maybe even attention seeking in terms of making those kind of predictions. It's so hard to say in what kind of time frame that will happen. But I think what we've seen over the course of the past few weeks, a couple of months with gold, is basically hit sort of a peak back in August where it broke through the 2,000 barrier, and now it's pulled back a bit. We're at 1,860 or something like that right now. So that has been a bit of a correction. I think the reason we've seen that is that a lot of people were putting money into gold because there was a tremendous amount of uncertainty around the election, and that seems to have calmed down more or less, depending on which media sources you listen to. But it seems that is sort of done and dusted at this stage and seems to have had a stable result. And that's, of course, slightly bad for the price of gold. But now I think we start to see it popping back up again, and people are refocusing basically, I think, on the central bank's monetary policy and the amount of money being pumped into these markets that is going to carry on for the foreseeable future. And that is, of course, very bullish for gold. So yes, we're a bit of a recovery rally right now. So I think we're going to go back and test the price we saw back in August around the 2,000 level. But then I don't see any real impediment stopping gold from going up further. Now, I wouldn't want to say when it will hit 3,000. That might be in 5 years. Who knows? But it does look like all the fundamentals are in favor of gold and seem to be quite positive overall.
And now it seems, Octavio, inevitable that we're going to have some form of stimulus. So if it's not enough, that's bad for the market. And if it's too much, or what it should be, that's good for gold. Either way, gold's the winner on this, right?
I guess it seems either way it sort of wins. And so if the stimulus doesn't go through, then some people sort of panic and think, okay, we should buy some gold because that's going to be bad for the economy and for the market. And if they do, sort of the other side of the equation of people, like I said, sort of the inflation hawks looking at gold as a hedge against inflation, and think, well, if the government starts to spend even more money and take on more debt, the Fed is going to have to monetize more of that debt, and there's going to be more cash in circulation. And so that's going to be good for gold as well. So it seems like it's in a nice situation right for gold right now. The fundamentals, like I said, look really good for it actually overall.
Yeah, they're kind of damned if they do and damned if they don't. And that's really where they call it the Fed being in a box, whatever. Fed's always in a box. It's just what type of box it is. And now I guess it's a golden box.
I suppose it is a box of their own creation, though, isn't it? I mean, they have boxed themselves into this place quite deliberately almost and predictably. So they've put themselves in a position where they are the sole support of the markets, really. And with the amount of money they've injected into the markets, that doesn't seem like it's going to go away. And I think they realize if they stop injecting this money into the markets do run the risk of crashing, which might be good for gold as well. So there's sort of an inverse correlation there potentially. If things start to go down, the markets start to pull back, that people look at gold as sort of safety, a safe haven asset class to go into. So it seems, I think the fundamentals, like I said, on maybe 2 or 3 fronts are pretty good for gold at the moment. So I'm quite optimistic and bullish there as an asset.
All right. So silver, that's been lagging rather. Silver has had a bigger pullback than gold. What's going to be with silver? Is it just going to follow gold's lead, or what are you seeing there?
I think silver will follow gold's lead. It tends to be more of a volatile asset than gold, so it doesn't have quite the sort of safe haven stature that gold has in terms of being an inflation head or against political instability, that is clearly very, very correlated with gold, but it tends to bounce around a lot more. So that's more of a risky play, I would say, in terms of getting into silver. It tends to move overall in the same kind of direction, but with much, much wilder swings overall. So that is a slightly different animal. And I guess you could talk about other precious metals and maybe commodities in general as well, but there the correlation is much, much weaker overall.
Yeah, so is the time right to be buying silver on this little down leg, or waiting for something else to happen before it makes sense to go into it?
I mean, timing these markets. So you have more experience in trading than I do, and timing markets is such a difficult thing to do overall. I would say it's probably worth waiting a bit rather than jumping into the silver market at this stage until some sort of clarity comes out in terms of movements. But I think we have seen a sort of pullback there. And it's not clear that it's going to take off maybe the way gold might in the short term. So it's an interesting, I definitely will keep an eye on silver as a precious metal. I wouldn't necessarily jump into it right now, but I'd be somewhat circumspect about that as an asset class.
So another metal, precious metal that's come to life over the past 2 weeks is platinum, kind of given up for dead. Platinum always traded at a premium to gold. Post-World War II, there were 4 or 5 times where it went beneath the price of gold, but it's been years, Octavio, since platinum was trading at a premium. Now it's trading at almost 50% or less the price of gold. Well, it's over 1,000. So it's trading at 55% of the price of an ounce of gold. Is there an opportunity here?
FSN Radio. It's all about what's next.
Today's show is brought to you by Mustango River Resources. Their flagship projects are located in Kirkland Lake, an established gold camp that has historically produced over 70 million ounces of gold. The Kirkland West project is a high-grade gold project beside Kirkland Lake Gold's world-class Mikasa gold mine, one of the highest-grade mines in the world. The Umeja project is an advanced stage project with 600,000 plus ounces of gold along the Cadillac Break, 25 kilometers east of Mikasa. Their projects have the potential to transform into another world-class mining camp in the Kirkland Lake District. Make sure you go over to Mustango.com. That's Mistango.com. Take a look and sign up for notifications. Stock is traded on the Canadian Stock Exchange, ticker symbol MIS. For more information and to sign up for notifications, go to Mustango.com.
The Financial Survival Network. It's all about what's next.
I really haven't paid that much attention to the platinum markets. I think for some time it was also sort of considered a safe haven asset that would be comparable to gold, and that somehow has gone lost. And perhaps it's something like Bitcoin that has taken that over as an alternative safe haven asset to gold, and the market only has so much attention for safe haven assets or inflation hedges. And maybe the money that previously would have gone into platinum is now going to something like Bitcoin and driving that price up. So I guess there's new asset classes on the market that might serve the function that something like gold or platinum did in the past. They're perhaps worth thinking about as well into the future, that those kinds of things might benefit as well from these inflationary pressures we might see coming out of monetary policy from the central banks.
I'm glad you brought that up, Octavio. Cryptocurrencies, I sometimes laughingly refer to them as kleptocurrencies, because how many of them do you really need? And the answer is need as many of them as they're required to soak up the last potential investor dollar, right? I mean, that's really it. But
I mean, I do look at them and scratch my head a bit, but I've been proven wrong. It's hard to argue with success. It's hard to, that's the ultimate proof, I suppose. And I've been wrong about cryptocurrencies in the past. And so I'm not going to bet against them again, I think. I think it seems enough people are interested in them that it's going to keep the price quite robust and keep moving up.
So have they had their move? And now, really, Bitcoin pulled back to $3,000, right around $3,000 from its former peak of $19,500. Now it's set an all-time new record. So it's gone up sixfold. It's not like the multi-thousand-fold return that you had initially. Is it going to trade rationally now, or is it going to continue just to trade on pure emotion and market froth?
Well, it's hard to say that it trades rationally or irrationally, because it's not an asset that is based on anything. Right? There's nothing behind it.
I'm sorry, I'm laughing, but it's so true.
Yeah. So how do you value crypto? I mean, I suppose you can make the same argument as gold, but at least gold has some sort of industrial uses and uses for jewelry and things of that sort. So there is an actual market for it where the stuff actually gets used. Cryptocurrencies, by definition, are not based on anything. You can't convert it into anything physical, any sort of commodity or any other currency. So there's absolutely no way to value them. So it trades purely on emotion. Yes, it trades purely on that. I mean, I know the supply is more limited, of course. So you can't expand the supply that quickly of Bitcoin the way the algorithms are set up and the whole blockchain is set up. You can't just simply expand willy-nilly the Bitcoin supply, and that's part of the appeal. But it means it's strictly driven by demand, and demand seems to be simply driven by emotions. Yes, it's an emotional play and little more. I think what's driven up recently is, of course, the announcement that PayPal came out with saying that they were going to accept Bitcoin as a payment medium on PayPal, and now merchants accept that to buy goods. So that obviously has people really excited again, saying, well, maybe Bitcoin will replace the dollar. But I think the problem there is that if Bitcoin gets close to that even, the governments will shut it down, because governments currently basically have monopolies over their money supplies, and they're not going to give that up very easily.
Yeah. People say, oh, you can't stop it. It's distributive networking and all this. Hey, what happens when you get 5 years for possession of Bitcoin with intent to distribute? You can go to jail for 5 years. What happens when they actually shut down the Bitcoin nodes and you can't get price discovery or any other cryptocurrency from the first generation? Then you're going to have problems with it.
Yeah, and so far governments have been a bit hesitant to do that. But I think if it looks like Bitcoin or other cryptocurrencies are going to overtake their own currencies as basically what gets used as money, they'll clamp down on them pretty quickly. So I think if they are successful, they might become victims of their own success, and governments will basically look to shut them down. And you're absolutely right. Technically, it might be more difficult to do. But legally, I think they could do it simply by doing exactly that. A prison term tends to focus people's attention very quickly on things. You want to avoid that. And if holding Bitcoin is going to bring that risk with it, I think we'll just sidestep it and avoid it as an asset class.
Yeah, I'm kind of inclined to agree. Maybe we're not there yet, but when governments start issuing their own Fedcoin or a digital yuan or whatever, their own blockchain-based currencies, there's not going to be room for private market-based solutions. That's just my take from the get-go.
Yeah, I guess a private solution for money, I think we're far away from. I mean, I know some people like to say we should privatize money and get to a state where the government's not involved in issuing money, but I think government is not going to play along there and privatize the money supply anytime soon. So I think that's the real risk for it, that as it becomes too successful, it gets shut down or greater restrictions get put in place, and it just doesn't work. Agreed.
So what else are you looking at? Asset classes that might perform better than average or keep their value in the potential turmoil ahead?
Well, we've been looking at banking stocks quite closely because that's sort of the sector that we're active in. So we sort of advise financial institutions and things of that sort. And I guess there's sort of a class of regional banks in the US that has done quite well over the course of the past few months. They got hammered as we had this downturn. They got hit much harder than the market overall, but now they've clawed back a lot of that. And some of them have even sort of doubled in value and price overall. Not so much the very big financial institutions, but more sort of the regional players who have regional networks in the US. They got hit really hard, and now they came back really hard as it seemed that things were not as bad as they thought things would get. So it seemed for a while that everyone was going to default on their loans and all the mortgages were going to go belly up. None of that's come to fruition. So these banks seem to be sitting in a much better position than it looked like a few months ago. And that's had a really positive impact on their stock prices. And also they've set aside a lot in terms of loan losses, reserves for loan losses, because they were afraid of losing money with an economic downturn. So they're sitting potentially on a lot of reserves there that they could now turn back into profits and unwind. So they're sort of over-reserved, I think, in terms of the credit reserves they set aside for credit losses. So that makes it an attractive sector to look at, I think.
That's interesting. Yeah, well, banks, they seem to have taken the leadership in the current rally on Wall Street as well. They're flush with liquidity, right?
Yes, I mean, so they are flush with liquidity, particularly sort of the primary dealers who have had money pumped into them from the Fed as well. So they're sitting on a lot of cash and looking to invest things there as well. But I would say that if you look at these large financial institutions over the course of the past 8 to 9 months, there have been business sectors that have done really well. All the markets activity, trading, bond trading, equities trading, things like that have done really, really well. What's lagged a lot is the whole sort of retail banking side of things, particularly things like credit cards and stuff like that, where we've seen lower balances and lower spending taking place. So those lines of business have taken a hit, as well as the credit loss reserves they had to set aside for those lines of business. So firms like Goldman Sachs and Morgan Stanley did really well through this downturn, and sort of the more general mainstream brick and mortar banks didn't do so well. But that's sort of now equalizing and coming back. So that's sort of encouraging to see. Interesting.
Well, the fear is always worse than the reality, right?
Not always.
Usually. Yeah, usually it's worse. But like you said, not always by any stretch. And I guess that about covers it. So just tell us where we find you and how we connect with you.
Best is on our website, Opimas, OPIMAS.com. You can find us there. That's probably the best place to go and see the stuff we're publishing there.
All right. Excellent. And hey, we appreciate you coming on with us as always. And any questions or comments for Octavio, please don't hesitate to send us an email, kl@kerrylutz.com. Sign up for a free newsletter, financialsurvivalnetwork.com. Octavio, we'll talk to you again real soon. Thanks so much.
Thanks so much. Take care.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.